Welcome to the deep dive. Today we're plunging right into the forecast and outlook for HMPRO stock. This deep dive is really designed to give you a solid understanding of where this major player in construction materials and home improvement stands. Quickly and thoroughly. We'll be navigating through company earnings, analyst reports, and broader industry insights to get you truly well informed.
Great topic. It's definitely important to explore HMPRO. Understanding a company like this is pretty crucial, especially when you consider the broader economic forces at play right now and how consumer behavior keeps shifting in that whole home improvement space.
Exactly. We've gathered a whole stack of sources, everything from their latest earnings reports and management discussions to, detailed analyst views and wider industry outlooks. So let's kick things off. Let's look at HMPRO's recent performance. What's the sort of overarching story from their latest results?
Okay, so looking back at their full year 2024 results first. HMPRO reported total revenue of 72,576.52 million Thai baht, THB, and a net profit of 6,503.55 million THB. But what's really interesting here is that even with sales figures they called stable, they actually managed to improve their gross profit quite a bit. And that wasn't just luck. It really signals, I think, strong control over their operations and costs. It shows a company focusing on efficiency, on profitability, even when the top line growth isn't, huge, which is a good sign, especially in tough times.
That's a really good point, focusing on the bottom line. So, if 2024 saw stable sales but better profits, how did that momentum carry into the first quarter of 2025?
Right, so Q1 2025, or Q1 68 as it's often called here in Thailand, total revenue actually dipped slightly year on year, down 0.7%.
Okay, a small decrease. Why was that?
Well, it's kind of a mix of things. You've got the ongoing economic challenges, both domestically and globally, plus, reduced consumer spending power, high household debt, rising interest rates, that all plays a part. And believe it or not, there was a calendar quirk too. February 2025 had one less selling day compared to the year before.
Oh, really?
Yeah, that alone apparently impacted sales by about 3.4%. And we also can't forget the government's Easy E-receipt stimulus. It was scaled back a bit in 2025 compared to 2024, so less of a boost there.
Got it. So, given those headwinds, same-store sales growth, SSSG, that's always a key one. How did HMPRO's SSSG look under those conditions?
Yeah, it took a hit. HomePro's SSSG was negative 3.3% in Q1 2025. And that was mainly driven by a drop in the average bill value per customer. To put some numbers on it, SSSG was down 4% in January, then 5% in February. It did start to show some signs of life, improving a bit in early March though. But here's an interesting twist. Despite those top-line pressures, the core profit for Q1 was actually expected to increase slightly year on year.
Oh, okay. How did they manage that?
Around 1.7 billion THB was the expectation. And it was attributed to a few things. Selling more of their own private brand products, which have higher margins. Also, they didn't have the marketing costs associated with opening new stores during that specific period. And just continued efficiency on the cost side.
Right, controlling what they can control, that makes sense. So that's Q1. Looking ahead, what about Q2? What are the analysts thinking? Are they expecting a quick bounce back or more the same challenges?
Well, the brokers seem to anticipate net profit for Q 2025 being stable to maybe slightly up year on year, probably in that 1.6 to 1.7 billion THB range.
Okay.
And the thinking is that this will be supported by, continued branch expansion and, importantly, those better gross margins from their private brands. Now, there was an interesting point of debate around the recent earthquake impact.
Ah, yes, I saw that.
Some analysts initially thought, okay, this might boost sales in Q2 from repair demand, especially for their mega home stores.
Yeah.
But company management actually noted that right after the March 28th earthquake, sales were kind of sluggish.
Sluggish. What?
It seems consumers were delaying big purchases while they waited for insurance assessments and things like that. So this raises an important point, right? When you see these differing immediate impacts, often it comes down to the timeline of consumer response. Minor damage gets fixed quickly maybe, but bigger insured repairs, those take time. So the demand might still be there, just pushed out a bit.
That's a crucial distinction, the timeline. So not necessarily no demand, but maybe not yet for some of it.
Exactly. It's often a delay.
Okay. What else was impacting their SSSG, especially more recently?
Well, April's SSG also remained negative, unfortunately. And here's a funny detail. Almost half of that decline came from lower sales of air conditioners and fans.
Really? Just the weather?
It seems so. Even a giant like HMPRO can't control the weather, right? We had unusually early continuous rain, apparently, and just less intense heat than the year before. So demand for cooling products just wasn't there in the same way. It just shows how many, unexpected things can affect the business. But it's also important to remember, those ACs and fans, they're generally lower margin products. So while the sales number dropped, the hit to overall profit might not be quite as bad as that sales figure suggests.
Fascinating stuff. So many factors. But okay, even with these headwinds, HMPRO isn't just sitting back. They've got some pretty ambitious plans, future business strategies. What are the key moves for the year ahead?
Yeah, they definitely have a forward-looking plan. They've outlined 5 core strategies for 2025 that really show their long-term thinking. First off, branch expansion. They're planning to open 12 new branches this year. That's actually up from 9 in 2024.
12, okay.
Yeah, and it'll be a mix traditional HMPRO stores, the mega home format, and their newer hybrid models.
Yeah.
The strategy here seems to be about grabbing key locations in areas with good economic potential, catering to everyone from homeowners to contractors. And they're explicitly not pausing expansion just because the economy is a bit slow. They see it as investing for the future.
Makes sense. What's next?
Second is omni-channel development. This is all about making that online to offline shopping experience totally seamless. They're expanding their online marketplace, adding over 10,000 new items. They're using live streaming for real-time shopping, leveraging all sorts of digital channels, basically meeting customers wherever they are.
Right, the modern retail necessity.
Exactly. Third is personalized marketing and home services. They're using big data, analyzing customer behavior to target promotions really effectively, trying to boost repeat business and loyalty. And their home service offering is quite interesting. Over 2,600 teams across the country. And get this, they'll even service items you didn't buy at HMPRO.
Oh, that's clever.
Yeah, it's a smart way to build that long-term relationship beyond just selling a product. Fourth strategy, external risk management. This isn't just about reacting, it's proactive, like diversifying where they get raw materials, managing product costs smartly, adjusting prices carefully, handling interest rate risks, building resilience.
Good governance there. And the last one?
Finally, there's sustainability, ESG drives. And it seems more than just talk. They're really integrating it. Big solar panel installations on branches to cut their carbon footprint, actively reducing plastic waste, expanding their exchange old for new program for eco-friendly products. It's good for the planet, sure, but it also positions them well with consumers who increasingly care about this stuff.
That focus on the hybrid store model is particularly interesting. What exactly is that, and why is it such a strategic move right now?
The hybrid model. Yeah, it's a really smart approach. Essentially, they combine a HMPRO and a mega home store in the same physical location. They often share things like parking, maybe even some back office staff functions.
Okay.
The big advantage is significantly lower investment costs. We're talking maybe 30–40% less per branch compared to building 2 separate standalone stores.
Wow, that's substantial.
It really is.
Yeah.
And that efficiency lets them expand into more locations faster. Plus, crucially, it lets them serve both customer types effectively in one spot. You've got homeowners, that's HMPRO's focus, higher margins around 30%, and then contractors and builders, mega homes focus, margins around 25%. The hybrid stores themselves, they manage to achieve pretty healthy combined margins, somewhere in the 27–28% range.
So they get cost savings and broad market coverage.
Exactly. For 2025, the plan is to convert about 6 to 8 existing stores into this hybrid format. That costs maybe 500–600 million THB per conversion. And they'll also open 4 or 5 new standalone locations, costing around 400–500 million THB each. Oh, and they're also putting 1 billion THB into a new automated warehouse to boost efficiency further.
Okay, big investments. Now, with all this focus on Thailand, are they still looking overseas at all? Or is it all domestic for now?
Good question. They do have those 7 branches over in Malaysia, and apparently they're profitable, which is good. But for now, the strategic focus seems firmly locked on the Thai market. No immediate plans for entering new international markets or even expanding much more in Malaysia currently. The opportunity here in Thailand is clearly seen as the main priority.
Got it. So if they're playing this long game in Thailand with these strategies, what does it all add up to for their bigger picture goals? Are they aiming high?
Oh, definitely. They have a pretty ambitious long-term target, hitting 100 billion THB in revenue by around 2029 or 2030.
100 billion, wow.
Yeah. For this year, 2025, they're targeting something like 75–76 billion THB in revenue. That would be about 4–5% growth. They're also aiming for a 2–3% SSSG this year, and quite an impressive 10% growth target for that home service division we talked about. Management keeps hammering home the point that home improvement is a long-term necessity. That's their justification for continuing to invest and expand, even with the current economic sort of fatigue.
Okay, that's the company's view. Let's shift gears. What are the independent analysts saying? How do they see HMPRO's stock price and its investment potential?
Well, the consensus among analysts is pretty overwhelmingly buy.
Okay.
Now, as of early April 2025, individual price targets did vary a bit. You had Krungsri at the high end with 13.50 THB, down to ASL at 9.50 THB. But the key takeaway for you, the listener, is that with stock trading around 8.60 THB back then, pretty much everyone saw significant potential upside.
Right. What's the logic behind that? How are they valuing it?
They typically use models like discounted cash flow, DCF analysis, and that tends to imply a price-to-earnings ratio, a PE, somewhere around 22 times future earnings. Now, what's important for an investor to know is that this 22x PE is actually seen as a discount compared to HMPRO's own historical average PE, and it's also a discount compared to many of its global peers in the DIY retail sector. It suggests the market might be, well, underappreciating its future growth potential.
Interesting. So if we connect that to the bigger picture again, what makes HMPRO look attractive to these analysts, even with all the economic challenges we've discussed?
There were several strong arguments they point to. First, HMPRO is undeniably a market leader, solid fundamentals. Second, profit growth is expected to normalize. They're looking for year-on-year growth in pretty much every quarter of 2025, driven by that expansion and cost control we mentioned.
Right.
The hybrid store model is also seen as a positive, helping keep capital spending in check. And then there's the valuation point we just touched on, trading around 15-16 times current earnings, which many analysts feel is just too pessimistic. It implies very limited future growth.
Which they don't believe is the case.
Exactly. And here's a really big long-term potential upside they often highlight. HMPRO currently only has about 50% market share of the listed home improvement market. That means there's this huge fragmented market of smaller, unlisted hardware stores out there. Massive room for HMPRO to gain share over the long haul, essentially consolidating the industry.
That's a significant runway. What about risks?
The main risk analysts consistently flag is a prolonged slowdown in the real estate sector. That could obviously dampen demand. However, the general view seems to be that unless there's some kind of major economic collapse, like a domino effect, HMPRO should be resilient enough to weather it.
Okay. And didn't you mention a share buyback program? How does that fit into the investment picture? Does it provide some support?
That's right, yes. The company has an active plan to buy back up to 800 million of its own shares. That's about 6% of the total shares outstanding. And this program runs from April 1st to September 30th.
And the effect?
Well, generally, a buyback like this is expected to provide some kind of floor or downside limit to the stock price. If the price drops, the company steps in and buys, creating demand. As of the latest reports, they'd only used about 10% of the total amount authorized for the buyback.
So plenty left.
Exactly. Plenty of ammunition, as they say, remaining to support the stock if needed. It acts as a kind of bucker for investors.
Got it. Okay, so beyond growth and stock price potential, what about the basics? Financial health? Returns for shareholders? Are they a stable company for dividends?
Yeah, absolutely. HMPRO has a very consistent dividend policy. They typically pay out twice a year. The latest one for the end of 2024 was 0.25 THB per share. The XD date was April 22nd, payment May 8th. That worked out to about a 2.92% yield at the time.
Okay, decent yield
Yeah.
and overall financial health.
Very strong. They maintain a really robust balance sheet. Their debt-to-equity ratio, the DE ratio, is consistently below 1 time. That means they aren't heavily reliant on debt, low leverage. They're also good at managing their working capital, keeping a close eye on receivables, payables, inventory. That helps maintain strong cash flow. Oh, and remember that minimum wage increase in Bangkok we talked about earlier, the 400 baht per day one.
Yes.
Turns out the impact on HMPRO is expected to be pretty minimal. Only about 10% of their Bangkok staff are affected, and the estimated hit to their 2025 net profit is less than 1%.
Wow, that's negligible, really.
Yeah, it speaks to their operational setup and maybe some foresight in how they manage staffing and wages.
It really is fascinating how they manage to keep things so stable and attractive, even when the economy's bumpy. What's the kind of secret sauce, do you think?
Well, I think it really boils down to the effectiveness of those strategic choices we discussed and just an unwavering focus on long-term sustainability. That emphasis on tight cost control and efficiency, the solar panels, optimizing the supply chain, that plays a huge role. Plus, the continuous development of their own private brands, those higher margin products. That really helps the bottom line.
Right.
And even though the focus is domestic, having those profitable Malaysian operations just shows a certain resilience in their international efforts too. So ultimately, you put it all together: strong balance sheet, consistent dividend payout, often yielding around 5% annually overall, a high return on equity around 25%, which is impressive, plus those strategic growth plans. It really does make HMPRO seem like an attractive option for investors looking for that mix of long-term stability and return.
Okay, so to kind of wrap up our deep dive for you, our listener, HMPRO is clearly showing remarkable resilience in a pretty tough economic climate. Their strategic expansion, especially with that innovative hybrid model, combined with solid financials and attractive dividends, really positions them uniquely. So what does this all mean for you?
Yeah, it leaves us with an interesting question to ponder, doesn't it? As this whole home improvement landscape keeps changing, with consumers wanting more convenience, more sustainability, more personalized services, how might HMPRO's strategy, this multi-pronged approach from stores to digital to ESG, how might that actually redefine what home improvement even means for us consumers over the next 10 years or so?
That is a really thought-provoking question to end on. Thank you so much for joining us on this deep dive today. We really encourage you to keep exploring, keep learning, and keep asking those important questions.